Hello guys, and welcome to my YouTube channel once again. In today's video I want to show you a very simple way you can just analyze the market and take some profitable trades on boom and crash pairs. But in today's video we're going to be concentrating on boom 1000. I think I've not done a video on boom 1000 for quite a while now, but we want to go into boom 1000. First of all, before we start our analysis, or when we start our analysis by going to the higher time frame to check out key levels in the market. So we go to the daily time frame like this, or we can even go to the weekly time frame depending on how far you want to go. So most times I go to the weekly time frame, while most times I start on the daily time frame to do my analysis. So you can see that the market has been bullish on the weekly time frame. Has been bullish until it got to this level. You see this same level where the market has always been reacting on getting to. You see it started, it pulled back, then it's going back up, though we're not sure if it wants to continue or not. But by the until the close of some candlesticks will confirm if the market is going up or not, or if the next candlestick is bullish and closes above this particular red candlestick, then we can confirm that the market will still go bullish, else it will be reversing. Else it will mean that it's going to create a kind of a double top at this point, so that they can sell to the downside because it has been buying for some time and would want to come back to fill gap this gap that it has created. All right, so we do not have much things to do on this higher time frame. It's just to mark out some key levels in the market. So I'll use the horizontal line tool to mark out some key levels in the market. Look for where market has reacted, buying, has bought and sold. This is a key level here, and I like marking the ones that are very close to the current price. So this is a key level at this point. Let me see this. Let me look for the best place to place this horizontal line. I think here is okay. Let me look at it. You can see market bought from here, and sold from here, sold from here, sold from here, then bought from here as well, because we put more emphasis on the current structure of the market. You see, market got to this point, bought up, got here again, then bought back to the upside. So then we'll go down to the daily time frame. Sorry, the daily time frame. We were on the weekly time frame. So go back to the daily time frame, and you can see this line, horizontal line, shows that it is well placed. You can see market reacting at this point. One moment, let me get my arrow line tool. You can see market reacting here and here again. Bought from here, also bought again from here. And if we drag this down, you can see market sold from here and also sold from here. All right, so that is it. Then we need to look for a key level here also on the daily time frame. So I've duplicated this line, and I can see a level somewhere here. At this, we see the market bought from here, sold from here, and bought again from here. These things we are seeing here, market sold from there. These things we are seeing here on the daily time frame will be more clearer if we go to a lower time frame, like the 1 hourly time frame or the 4 hourly time frame, or even the 15 minutes time frame. Will give us more clarity on that level. Then I would like to change the color of this particular line so that I will know which time frame has that particular key level, or that level there actually. Then you see there's another level here. There's a level here, so I will change it to the same color thing. If I'm not mistaken, that's the color. Okay, maybe I can remove this and then duplicate it. Why I am putting this one is because market sold from here, bought here, and also bought here again. The fact that the lines are close doesn't matter because we are on the higher time frame. So when we get to a lower time frame, we'll see that there's enough space between those lines. So we'll go to the 4 hourly time frame, also do all those markups. We'll go to the 4 hourly time frame and also do those markups. But I do not want to waste so much time. I don't want to take so much of your time. You should know how to mark these things up. You can see with those lines, those places I marked, put these lines. You can see the way market has been reacting along those places. So once you put the horizontal lines properly, you'll see the fit well. You can see all these areas. You can see the reaction of the market on those lines because they have been well positioned. They have been well positioned, guys. This is on the 4 hour time frame. So now, what is the strategy? Because I don't want to continue keep putting these horizontal lines. Normally, we'll look for a horizontal line, sorry, a key level on the 4 hour time frame, and also look for a key level on the 1 hour time frame. But you can do that. You can do that by yourself. Just learn to identify key levels in the market. So now the strategy I want to share with you is the same strategy I've been posting here on this channel. You see, what are we looking for? We want to see some kind of movement and indicates a reversal. Sorry, movement that indicates a possible reversal in the market. How do we know that the movement would possibly create a reversal in the market? Let's look at this. We want to see something like this. We want to see a kind of a pattern that looks like this in the market. Sorry. We want to see something like this in the market, where the market has been moving and moving and moving in this way, then breaks out, gets back to a key level on the 15 minutes time frame or a strong support, a resistance zone. Then we want to see a confirmation, then we sell down. Or we want to see something like this, a channel pattern. We want to see market moving in a channel pattern and approaching a key level. Then we want to see it after hitting a key level or a strong resistance zone. We want to see a reaction, then a breakout of this trend line, of this particular line. Then market has to come back and retest where there is a previous high, or let's say yes, a previous high. They want to see market selling down with peace of mind. This strategy works for both scalping and for catching spikes, guys. The strategy works. You can use it to scalp the market. You can use it to catch multiple spikes as you want, guys. Then we want to see something like this. Want to see the market moving in a kind of a pattern that looks like this. Excuse me while I change this color. Want to see the market move in such a way that it moves first impulsively, then starts to move correctively in the market. That's what we want to see. Once we see this kind of movement in the market, we should expect a possible breakout. And after a breakout, what do we wait for? We want to see a retest on a nearby resistance zone, something like this. As you can see, let me get a different line color. You can see this. After the market broke out at this point, took this low, you can see that the market came back and it has to get to another previous high somewhere like this before you expect a proper sell. So but if it skips this particular level, then you need to target this particular one here. You understand? So that's how it works, guys. That is how it works. So in that case, you can see what we are having on screen. You can see what we are having on screen. Now the market was moving a kind of impulsively. This is on the 1 hour time frame. Sorry, 4 hour time frame. Market was moving. I think I should better go to a much lower time frame to do this explanation. Like although this thing happens on all time frames, but I mostly like using the 15 minutes time frame to work. I trade on the 15 minutes time frame. Now look at this. We see the market moving here impulsively, guys. Market moved here impulsively to the upside. You can see the number of red candlesticks are just very few, but the big green candlesticks are very large. The body and the length very large. You see, meaning the market is moving impulsively. But on getting to this point, you start seeing some red candlesticks and the green candlesticks are not that long, and you see the direction of the market is tending to change at this point. So when you start seeing this kind of structure being formed in the market it was moving impulsively, then it started moving in this manner. This is no longer an impulse, it's a corrective impulse. It is a corrective impulse in the market. So once you start noticing this first one, you see another spike here, you see another one, guys, look for a line and join those two and join this thing like this. All you are waiting for is a breakout. All you want to see is a breakout of this particular trend line and a retest. A retest to this previous level here. This is a level here in the market. You want to see a retest to this previous level. Now, what were you can see now is that this particular level here, where the market is coming to retest, normally we don't use these lines. We just use lines to map, but actually they are zones. They are not just a mere single point in the market. Like what I'm trying to say here is that this line I'm trying to put here, if we put something like this, we use things like this to I mostly use things like this, like a rectangle, to identify a zone in the market. I use a rectangle to identify, but most time we use lines, so that you won't think I'm just telling you this, because you won't just expect the price to always get to the particular line or the exact line where you have the line. Then before it will react, it can react before it gets to the line. Meanwhile, it's still within the zone. You understand? So now, what we have here at this point is this: this trend line has been broken. If you duplicate this trend line and you put somewhere here, let's see something. Let's see if it's not going to give us a pattern. Let's see if it's not going to give us a chart pattern. Now you consider the wicks of the candlesticks. You see, that's a channel. That's a kind of a channel. So it broke and retested. This particular type of retesting, though I do not mostly like trading this kind of retest. Like you say, it broke through, then gave this small bearish candlestick, then it tried to retest with this pin bar here, then came back and sold down. It sold down. So most times the market will come back in here, will come back to this zone nicely, or get to this particular, the wick of this candlestick where it started selling down before it spiked here. So it can get to this particular level here. Maybe I need to bring this thing up. It might want to get to that level most times, but not all the time. So all you need to do is, if you want to enter a trade, this particular type of trade, then you need to maybe put your stop loss somewhere around here, around this level. Let me get something, just put it somewhere around here. Let's say you want to enter your trade at this point, after this pin bar, you put your stop loss right above here, something like this. Just put it right above the wick of that candlestick. There's a very big likelihood that the market will not get to that spot, but why you're just putting it there is because you don't want to get stopped out if you put your stop loss too close to your entry. That is it, guys. So that works a lot. It works a whole lot of times, guys. So we can now, let me go to the next one. Now look at this. You can see that after the market broke out of this trend line, let me put it back. Let me just put it back. I want to use just this place to explain a whole lot of things. After the market broke out of this trend line at this point, which was a channel actually, after the market broke out, it came down impulsively to this, up to this level. Then it went up again and started giving some kind of, after this long bullish candlestick, the market started giving another kind of movement that looks like an impulsive correction. You see, kind of an impulsive correction here. Then came down, broke through without any retest. It sold down, came back to this point and gave another movement to the upside, started falling. So now automatically, once you see that there is a high here forming, this kind of movement here is a kind of a corrective movement now, because of these highs, because of these green candlesticks and the red candlesticks. See, the market is not just moving straight. It came down, went up, came down, went up. So this is a kind of a correction. This is a proper correction in the market. This is not an impulsive correction, but a proper correction from this point down, because the market was actually bullish. Then it corrected down to continue its bullish movement. So if you bring a trend line, place it right here, and you draw this down, you see that the market was actually in a downtrend. Then the market, after being in a downtrend, let me just get this. Let me put it how I actually want to put it properly. So you can see the market was in a downtrend, and after it was after this trend line was broken out, so it came back and still continued down. Man, now look at this. The next green candlestick after it formed the next green candlestick outside here, and this was zone. This is a zone where the market has been buying previously. After it broke out of this particular trend line, you see this bullish candlestick. The next one that formed was a red candlestick and never went back into this below the trend line. So the next spike started at this point, and you see it spiked up to this level. So now there's no way you will see a correction in the market or a corrective impulse that you won't expect the market to change direction very soon. Even if it is just a small change in direction, there must be a change in direction in the market. Even if it's a small change, a minor change in direction in the market. So all you need to look for is just for a kind of a movement that indicates a reversal in the market. You just need to see a movement in the market. Like there's another one here. Look at these guys. Market moved here impulsively. On getting to this place, started giving this impulsive movement. Sorry, corrective impulse movement. You see, if you bring a trend line to join here, if you bring a trend line, you join here, then you carry this same trend line and duplicate it, like put another one right here. You see, this is giving you a kind of a wedge pattern. This is giving a kind of a wedge pattern right here, guys. This is giving a kind of a wedge pattern. Now you see the market broke through this trend line, came back and retested this area, came back and retested this zone, and with this bearish engulfing candlestick pattern right here at this zone, this bearish engulfing candlestick pattern, this it indicates the market was going to sell. So you can use this thing to be catching, even if it is three 15-minute candlesticks and you're out of the market, guys. You make some reasonable money depending on lot size, guys. This strategy works for all pairs. Now the market, after breaking out of this trend, this wedge pattern, see the correction movement that's been given here. This is an actual correction because the market is bullish. So impulse correction, impulse correction, this is actually the main correction that it is doing. So with this, now you can just get a horizontal line. You just duplicate this, and if you put it right here, what are you going to see? Okay, you can see now this spike broke through this trend line to indicate a change in direction. And besides, there's a double bottom here, though we are not actually concerned about this double bottom. We are concerned about what is actually happening here. So you can see the market broke through this trend line, and there's a little zone here, guys. Now look at this. The market has been buying from this particular place. You can see the buying activity here and another one here. So this is actually a little zone in the market, which you can just maybe indicate with a horizontal line. With this rectangle, you can see it means the market broke through that zone, came back to retest with this one candlestick, then spiked, came back, spiked again, and the spike still went through. So you can see this strategy works, guys. All you need to do to wait for is a correction movement in the market. You need a correction or an impulsive correction movement in the market. Put your trend line, wait for the market to break out. Once there is a breakout, allow the market to get back to where it's going to maybe a 15-minute time frame key level. Let the market get back to a key level, even if it is a 15 minutes time frame key level in the market. On getting there, get a confirmation, then go into trade, guys. Go in and trade the market with peace of mind. You can use this to use this to scalp the market for as long as you want, depending on the time frame and the length of this channel, because the length of the channel or the wedge pattern you see also influences the major direction of the market, also influences how long you would scalp and how long you hold to catch the spikes. So I will explain that maybe in my next video. So guys, that is just it. This video is already too long. I will just try to be updating you guys. I'll try to be posting more videos as frequent as possible now, and I want to take these videos very seriously, guys. Practice these things, practice them, and you get used to them, and you start making money. Practice them on your demo account. Practice on your demo account with lot sizes that you can use to trade on your main account. I'll talk about this maybe some other time. But meanwhile, go and practice this thing. It's a free strategy. It works very well, guys. Practice them on all boom and crash pairs, and you'll come back to thank me later, guys. Meanwhile, for those of you that are still interested in the mentorship training, the mentorship, the group, would like say the batch training will soon start. But meanwhile, if you need a one-on-one coaching, one-on-one training, which you can contact me anytime for your inquiries or maybe challenges when you're trading, then you need to click the link in the description of this video. It will take you to my free Telegram channel where I post updates about what we do or anything that's relevant to us. So when you get there, you will see my direct contact where you can contact me to discuss about the mentorship training. Most of you, it's not as if you do not know or you don't have a strategy or you can't be successful. You need somebody to guide you, and you need, as because you need somebody to guide you, need a mentor. Pay for knowledge and you will not regret it. Pay for knowledge, guys. So if you are interested, try to reach me. Follow the link in the description of this on this video, then contact me so that we discuss, guys. So till my next video, peace out. See you. Please like and share this video and comment. Bye.